Hello everyone, this is Evan here from the Trade Risk on Friday, November 11th with a weekend market recap video. It'll be a little bit shorter. We're going to cover the broad picture, big market environment, other major markets, and sector analysis. We'll skip the individual names and trade ideas. Going to do a separate post on that a little bit later this weekend. Before we get into the video, I want to bring your attention to a webinar that I'm hosting next Thursday, November 17th. This is a webinar called Swing Trading for the Active Trader. It's a presentation that I just put together and did locally, and I want to get a webinar out here on the same kind of topics. Had a lot of good feedback. A lot of people liked it. So we're going to be covering a wide range of topics. It's going to be covering, essentially being an active trader, but not staring at the screens all day, not day trading, but taking an active swing trading approach. So it's going to be a wide-ranging webinar. We're going to talk about specific trade setups, trading multiple time frames, market timing, market environment, risk management, end-of-day trading, taking profits quickly. There's going to be a lot of different things here. So drop your name and email address, traderisk.com/webinar, and you can be signed up for the event next Thursday. I'm also going to put a link in this video, top right-hand corner. You should see it coming up now. You can click that and drop your email in there. So with that out of the way, let's get into the markets here. S&P 500 finished up almost 4% on the week, positive 3.79%. And let's start with the weekly time frame. You can see what we're in here. We've been in this kind of sideways to down consolidation pattern, flag, call it what you will, for the past almost 15 weeks. And this is the first week where we're finally seeing a bit of an expansion in range to the upside, and the bulls are starting to get some of that momentum that they had throughout July of this year, and even earlier March, April, May of this year, is starting to come back. So this is a good first step, good first week in the right direction of potentially resolving higher. They certainly still have their work cut out for them. If we go to the daily chart, you can see we ran right into prior resistance, which was support throughout August, and that's right around this 217.50, 217 and a quarter level, right in here. So again, that's the highs from September and early October. It's support from most of August, and that's where we sort of cooled off and pulled back just a little bit here on Friday. And that's healthy action given how fast we came and rallied off of these lows. Remember, all of the gains came from this week. We started with that gap higher on Monday, and Monday was a 2.21% day to the upside. Wednesday, again, another 0.5%. Tuesday was 0.5%, Wednesday was another 1%, Thursday was another 0.25%. So we really just made progress all week and until Friday, where we just cooled off a bit, retested Thursday's lows, we held, and we finished near the highs of the session. So all in all, if you're a bull, this is constructive action. You want to see us, essentially hold the majority of Wednesday's candle, Wednesday's action, keep us above 214.50, 215 in the top, 25% of this range, and then perhaps in the coming weeks, maybe into the end of the year, we make a run above 217 and start to make a challenge at those all-time highs. That's certainly the bullish scenario and the bullish outcome. On the downside, if you were going to try and paint the not so optimistic picture, you could say we're still range bound. You could say we just worked off these extreme oversold conditions, and now we're back to this kind of neutral to choppy market environment. And that could very well be the case where we're back in here, we're going to carve out some wider range. Maybe we retest all-time highs, but they fail, and we just kind of move sideways here, in a 6%, 5% SPY range. Very possible, very real scenario. Get back to the daily chart. One of the slight concerns I had this week, breadth not all that exciting, enticing to the upside as far as stocks advancing versus declining. Now, on the other side of that, there were a lot of new highs this week, a lot of new 52-week highs. We saw an expansion in that number. That's very constructive. That is good. That is bullish. But you'd still like to see a more broad market participation in this rally, something we haven't seen yet. Perhaps we'll morph into it. Perhaps after some sideways in here, we'll start to get more groups, more sectors of this market sort of participating on the upside. For now, though, it's very concentrated, and those stocks that are moving big, and that's what's really kind of keeping us up here. So that's my thoughts here on the S&P 500. Let's go to the IWM. This is truly a huge week for the bulls, up 10%. This is one of the biggest up weeks. You have to go back to post the financial crisis of 2008 to find weeks with such big magnitude here, because we haven't seen anything like this. Maybe even in maybe 2011, but I don't think we even got anything this big in 2011. So up 10%, we completely just ramped to new year-to-date highs here in the small cap. This is the Russell, and this contains a lot of the biotechs, some of the material names, even some of those banks, those smaller banks. They're in this bucket here in the Russell 2000, and that's really what pushed us to these to new year-to-date highs here. So very constructive. Remember, we fell below this 120 support, and we just blasted off to the upside. Not quite all-time highs here for the IWM, although very, very close. So IWM, certainly the constructive, certainly leadership here, where you want to pay attention to, and we'll get into some of those sectors in just a little bit. On the downside, we have the Qs, which, look, still finished higher 2% on the week, but when you take that in comparison to the S&P 500 or the IWM, certainly the laggard. You can see here we are very close to all-time highs still. However, we're just kind of left here in the middle of last week's range. We didn't even take out last week's highs. We attempted to. We challenged them, but we failed there. So it's going to be interesting to see which way the Qs want to resolve here. Do they eventually kind of catch their breath? Maybe they have to come back down here and retest support. Will they be the real drag on this market, or are we just going to kind of move sideways and start to hopefully, at least get some support and get some bounce in these names? Be very interesting to see, but you can see right now, given where this closed versus the S&P 500 and the IWM, certainly on the lows, it's just the inverse picture, and there's a very big difference between how these two performed on a relative basis this week. Now, getting into some of the other major markets here, TLT closed the week on the lows. This got hammered this week, down 7.36%, cut right through support, and it's back to this old range here, essentially from 2015 that we were in. Back over a year ago. So in trouble here, the TLT bulls, but it is extremely oversold. Maybe you can, if you're tactical, maybe you get some type of reversal play next week. For now, though, you have to be careful. Trying to knife catch this. There's certainly a big unwind here for people that were trying to jump into the TLT for either safe haven, into the election or just the bulls in general. So, got to be cautious there. Continues to unwind. Look for a potential reversal next week if you're real tactical, short-term trader. Gold hammered as well these past 3 days. This is some pretty extreme selling. Look at the range of these past 3 days here of selling in GLD. Broke down from this bear flag. Talked about, before the election, we had this kind of nice pop higher. Just kept mentioning how this was such a sloppy kind of pattern and formation here that it was emerging from. And as much as I like the sort of surge here pre-election, just could not get myself to try and take a bite on that to the long side because of just kind of the mess that it emerged from. And you can see that ultimately did resolve back to the downside. You could argue here, again, very oversold, 3 days, 3 large range downs. Maybe you get some type of relief rally into early next week. If you're tactical, you can probably play in that. Longer term, you may want to be careful or start scaling in if that's your strategy. And silver really stayed pretty immune and pretty resilient relative to gold until Friday, where we really saw this very wide range sell-off day, down 6%, and just really kind of giving it up here on Friday. If you go back to the weekly chart, you can see, I don't know if this is going to look like some type of head and shoulders pattern that eventually plays itself out. You got the head here from May and June, and then you got the other that we're working on now. So it'll be interesting to see how silver plays out. Definitely a little concerning here. It had a nice rally, still up on the year nicely, but it is giving back a lot of those gains here in recent weeks. Finally, if we get to the US dollar, UUP, we haven't looked at this this in quite some time, but take a look at this weekly formation here. The US dollar in a very long-term look here had been in an uptrend, all throughout 2014 and 2015. Since that point, it's been consolidating sideways, or at least in this nice little channel here, and you can see it's getting back and testing the top end of this trend line, which extends from the early 2015 highs. So be interesting to see if this gets a breakout and resolve to the upside. Does it extend this big trend, this long-term trend from 2014, and do we start to see new multi-year highs here for the US dollar? It'd be very interesting, and that certainly could continue to pressure commodities. And speaking of which, we didn't look at USO and UNG. USO had a real tough past couple of weeks, and this week was no different. You can see Friday we had a gap lower, finished on the lows. We put out a post here yesterday on Thursday with this bear flag right above support. This is a point at which we ended up getting long at the end of the day. I'm sorry, not long. We ended up getting short USO. We got long DWTI, which is the inverse to crude oil, 3x triple inverse. So we got long DWTI on Thursday. We saw a nice favorable continuation in our direction today. We sold half of it here for a nice little gain, and we're going to continue to hold half short into Monday. We'll see how that reacts, if we can get more follow through lower. You can see it is at about 2.5, almost 3-month lows now. USO back. Next reference point to the downside would be the August lows down here at $9.25, and I think we have that OPEC meeting coming up later this month. So USO certainly under pressure. Fast moving averages sharply lower as pressure to the downside. Bears are in control. Don't want to fight that just yet. If we did get a nice kind of gap higher, complete reversal pattern of this gap lower, and we start to break above $10 next week, then you might have a nice little kind of bear trap here that has been set. Until that happens, though, my bet is still to the downside here in in USO. That's how I'm playing it. UNG, though, not much better, right? Continues to see a sharp unwind. Sellers in control. Fast moving average is lower. You can see trying to stabilize a bit here around this $7 level. So we'll have to see if that actually can hold up into next week. But for now, very, very damaged. Would not want to be trying to bottom pick this at this point. Now let's move into some of the sector analysis here. XLI, let's start there. Industrials really ripping to the upside here this week. Take a look at this candle, 8%. Just a monster breakout candle here above these previous highs here. So industrials off to the races, looks good, overbought, but this is what sets trends in motions. You get the kind of the biggest surge right at the beginning and the end of trends, and this certainly looks to be like the beginning of a trend here in XLI. IYT, we've talked about this for many days, many weeks, frankly, as it based underneath this resistance line, and you can see off to the races this week, up 6.8%, 6.18%. Take a look at the monthly chart here. You can see we broke the downtrend line, throughout July and August of this year, and then we just kind of levitated at this horizontal resistance, and that was until this month where we're starting to see that sharp move higher. So IYT could very well be back, in motion to these 2014, 2015 highs up here over the next coming weeks and months. So keep that, for you long-term players on watch. XLF, also no surprise here. We talked about this in the midweek video. Some extraordinary moves here in some of these large cap banks. JPM, Citigroup, Morgan Stanley, Wells Fargo, all of these big names, and down to the little ones, the regionals, all moving sharply higher this week. 11% move. We haven't seen a move like that in quite some time. So financials really, taking out the 2015 highs, really igniting here, and this looks good for, again, that long-term kind of trend, and that bigger picture is going to really be in motion here on the financials. And then finally on the upside, IBB. Again, these are the three sectors we talked about on Wednesday, that immediate rally after the election. IBB continues to work. Biotechs, even the small ones, really getting that relief rally. We had this big gap higher, and so far we have not been able to retrace it. We've continued to move sideways. Friday we ended up down just a bit, but you can see in the short term we had a 14% move in IBB from the lows of 2016 all the way back up to towards the highs of this year. So looks good. Still sideways in this base here, depending on how you want to draw it, but still very constructive action that you could get some, that this is a true sort of bottoming formation. Still yet to be seen. You want to get a little more follow through, but very, very constructive so far. On the downside, there's 3 sectors I'll point out. XLK technology, right? We talked about the Qs being weak. XLK continues to be weak relative to the rest of the things that are moving here. You can see it's finishing down. It's finishing up on the week at 1.19%, and it did finish up higher on Friday, eked into positive territory, up 30 basis points. So again, range bound maybe at best. If you're a bull, you want to see $46 hold. That's going to be sort of your line in the sand, and that coincides with September lows. XLP, this is the staples, right? There's a rush for growth right now. We're leaving behind the staples, the utilities, right? Those are the things we want to throw away, and we want to go for things with growth, high beta. So staples don't fit into that. They are lagging this week on a relative basis. And then finally, XLU, just like we talked about with TLT, with rates going up, XLU is going to get hit as as investors can find yield in other places right now. So XLU under pressure on the week. So quite a lot going on. Again, very concentrated moves. You could be short. You could be very successful shorts this week in some sectors, and you can have some very successful longs. It depends on how you want to play it, and depends on where you sort of live and your time frame. So that is the wrap up for this week. I'm going to have more trade ideas out in a separate post or video, so keep an eye out for that. And don't forget to check out the webinar next week. That's Thursday, traderisk.com/webinar. Drop your email there, and I hope to see you guys there. Have a great rest of the weekend, and I will talk to you soon.